Hello friends, a very warm welcome to my channel. In today's video, we are going to talk about another very interesting company which is into the capital market space. So this stock has been a consistent compounder for a very long time and it is expected that it continues to deliver good returns in the future also. So the stock which we are going to discuss today is CDSL. If you are new to the channel, please do subscribe and hit the bell icon to get the updates of all the new videos that I upload. And if you are not a part of our Telegram channel, do join today by using the link in the description button. Every day morning I share market analysis which will help you manage your portfolios much better. So this will be the flow of our discussion. We'll discuss the business model of CDSL in brief first. We'll look at the stock performance in the last few years. We'll see the main financial parameters. We'll discuss why the stock has bounced back from the recent consolidation. We'll discuss the outlook of the management going forward. We'll see the valuations at the present levels. We'll understand what could be the possible risks of investing in this company and form a view after understanding all these things. So CDSL is a market infrastructure institution. So there are several parties involved for the capital markets to function, like the brokers, the depositories, the investors and several other parties. So CDSL is one of those market infrastructure institutions which plays a key role in functioning of the stock market as well as other industries like insurance, etc. So in simple words, what CDSL does is whatever securities you buy, it helps you store those securities in demat form in the depository account. So along with the storage, it also enables the different buy or sell transactions in a smooth way. So when you talk about CDSL, it is not just about the equity shares. There are several other securities like debentures, treasury bills, bonds, mutual fund units, insurance policies, several things which can be stored in a demat form. And along with the storage and transaction services, there are other services like e-voting whenever there is a resolution being taken by the company, e-locker, several other services are also provided by CDSL. In terms of size, CDSL is the largest depository in India in terms of the number of accounts. So this is the structure of the company. The parent company CDSL, and it has three subsidiaries. The first one is Insurance Depository Limited, then CDSL Commodity Repository Limited and Ventures Limited. So the Ventures Limited deals with the KYC registration and other details. Insurance Repositories stores your insurance policies, and the Commodity Repository enables the transaction in the commodity exchanges. When you look at the background and the ownership of the company, 15% of the company's shares are held by BSE Limited, which is the largest shareholder and manager of the company. Other than that, major institutional holdings like Standard Chartered Bank holds about 7%, PPF mutual fund holds about 5%, LIC also holds about 4.5% in the company. So as the promoter holding is less, this is majorly a professionally run enterprise. If you look at the stock performance pre-COVID, the capital markets were active but not very active, as we have seen a spurt of growth in the market participation post-COVID. So the stock was in a consolidation stage pre-COVID, and during COVID in FY 21-22 there was a spurt in the number of users opening demat accounts with CDSL, which led to a substantial rise in revenue as well as stock price, and the stock hit a high of about 1725 in the post-COVID rally. Post that, what happened is, because the stock markets are kind of cyclical, whenever there is a short-term bear market, the number of participants decrease or the number of additions of new accounts every month decrease, which led to a slight slowdown in the revenue and consolidation in the stock price. So that made the stock consolidate, and it made a bottom at somewhere around 800 and 900 levels, and thereafter as the participation bounced back and the results started coming, we saw another rally from that zone to about 2000 levels recently. So as of now, as the growth is back, the chart is strong and the stock is consolidating at somewhere around 2000 levels. You will see a similar trend in the revenue. In FY20, CDSL did a revenue of about 200 crores, which bounced to almost 550 crores in FY22. And FY23 was flattish at somewhere around 555. That is when the stock started consolidating and witnessed a small sideways correction. And now in the trailing 12 months, you see there is a bounce back again to somewhere around 700 crores. And that's why the stock price has started going up. In terms of EBITDA, there was a rise in EBITDA from about 89 crores to 365 crores, which is much higher than the revenue growth because of margin expansion. And thereafter, there was a small dip at somewhere around 319 crores in FY23. And now we see a increase in EBITDA to above 400 levels in the trailing 12 months. When you look at the margins in this business, what happens is the infrastructure cost and everything remains the same. But as the number of users increase, as the number of transactions increase, there is operating leverage which comes in and which leads to margin expansion. So the margin grows faster than the revenue volume in this particular industry. So that led to margin expansion from 42% in FY20 to almost 66% in FY22. and now there is a small cool off in the margins, and now it ranges at somewhere around 57-58%. But for any business, having a margin of 58% at the EBITDA level shows the strength in the business and shows the competitive edge of that business, because this kind of margin levels are very rare. One thing you should observe, that this is a professionally run company with a low promoter holding of BSE at somewhere around 15%. Now, what led to the bounce back in the stock? Performance which slowed down in FY23 bounced back in FY24. That led to the increase in the share price, and this sector is in tailwinds because the penetration of number of people in the stock market or the number of demat accounts in India compared to other countries is very less. So the sector by itself has tailwinds for the next 5 to 10 years going forward, and the margin expansion which is playing out is leading to operating leverage. So the profits are growing faster than the revenue. In terms of BO accounts, which is the beneficiary owners accounts, you see there is a consistent rise, and every quarter they have this is in lakhs. So every quarter they are opening somewhere around 45 lakhs to 50 lakhs in FY23, which has further gone up to almost 80 to 85 lakhs in FY24. So these are per quarter numbers which we are discussing, and our total number of BO accounts, if you see, it has gone up from 779 lakhs to 1047 lakhs in the recent quarter. So although the management doesn't give numbers or growth guidance in specific numbers, we have observed that the revenue growth in CDSL, if you take the average CAGR of the last 3 years, 5 years, 10 years, has been consistently upwards of 20%. So we expect a similar trend to continue in going forward as well, as the user penetration in India is still low, and there will be more and more people coming to the markets and opening new demat accounts going forward as well. Other than this, the company will provide additional services like insurance, KYC, and several new things which will come in the future also, which will increase the usage of the transactions in this company. In terms of valuations, at present the stock trades at somewhere around 55 times earnings in the trailing 12 months. And in the last 5 years, the median earnings multiple the stock has got at somewhere around 40 times. So in terms of valuations, at present it is more or less fully priced, and the rise in the stock price from the current levels would be generally in line with the earnings and profitability growth. So that factor of re-rating in the stock has already played out. Now, what are the risks of investing in this company? If there is any change in the government policy specifically for this industry, in terms of taxes in the stock market or any other change in policy, will impact the markets and this company severely. There could be an element of cyclicality, as we have noticed that the number of transactions and the number of account additions go down during the bear markets. There could be a technology risk, as the base of the company itself is on latest technology and it has to be seamless and smooth going forward as well. And they have to continuously upgrade to match the user experience going forward. So any disruption in the service quality or technology will hamper the growth of this company, and the customers may shift to the other depository, which is NSDL. Now, after understanding the business model, the growth prospects, the risk valuations, the stock performance, what is our opinion on this company? If you are holding this company from lower levels, you should continue to hold, as the growth is expected consistently in the coming months. If you are considering taking a fresh position in the stock, then as the valuations are fully priced, you should look at buying the stock at some lower levels, so that there is some valuation gap along with the growth which is expected, which will lead to some decent returns going forward. So that's about CDSL. I hope you like the crisp analysis. A full analysis of the stock we have done in the past already. So you can also refer to that video for a detailed analysis. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, don't forget to mention the name of the stock in the comment section. Do join our Telegram channel using the link in the description. But thank you for watching and have a wonderful day.